This is Horizons Middle East and Africa, our top stories this morning. One step closer, the U.S. Senate has passed a temporary funding bill that could end the 41-day government shutdown. The House plans to vote on the measure on Wednesday before sending it to Donald Trump to sign. Syria's President Ahmed Al-Sharaa secures additional sanctions relief during his historic meeting with Donald Trump at the White House. And unrest in Tanzania. Authorities ordered the arrest of senior leaders of the main opposition party following deadly protests over the disputed election. It's just gone past 9 a.m. across the Emirates, 7 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersechi. And as we were mentioning, potentially we are one step closer to the 41-day government shutdown in the U.S. Being concluded, but still a few steps to go. But potentially we're seeing a bit of risk on as optimism is factored into the markets right now. If we take a look at U.S. equity futures, they are trading a bit flat at the moment, but we should mention what we saw on Monday. We did see major U.S. indices closing in the green, including the NASDAQ closing up more than 2% right now. As we mentioned there, futures trading a bit flat, but continued momentum looking like it is still factored into the markets in tech stocks, despite the pullback, though, that we did see last week amid some of those questions around AI valuations. MSCI Emerging Markets Index, again, trading slightly down right now, down about 0.2%. But yesterday on Monday, we did see the EM index notching its biggest advance in 2 weeks. Again, potentially that is the resolution to the government shutdown factoring in to EM more broadly. EM currencies also gaining with the SA, South African rand and the Chilean peso among the biggest gainers, though right now looking like a bit of downside to start this Tuesday. It's a different story for the Bloomberg dollar. We've been talking quite a bit about potentially what the future holds for the greenback strength in the global markets right now. It's looking like it's marginally up right now after falling for the past 4 sessions, up just about 0.1% there, and potentially some of that resolution to the government shutdown factoring into the dollar. As we are also seeing with the spot gold price right there, up just over 0.6%, up for a third day. What we're seeing with gold right now above that $4,100 an ounce, and that actually follows the biggest rally that we had seen since May. Potentially that is the U.S. government shutdown resolution that is factoring in there, but also what we could potentially see subsequently, which is the release of these long delayed economic data prints in the U.S. Potentially we see a bit of downside surprises coming from some of those releases. Potentially there's some safe haven bidding in there, but we are seeing other commodities trading upwards right now to start this Tuesday. And a quick look at your terminal chart today. We did hear on Monday from Stephen Myron speaking again about potentially what he is seeing as a 50 basis point cut in December. Despite those comments, though, we are still seeing short-term Treasury yields ignoring some of this and potentially finding their own level. And the odds for a rate cut, let alone two at this point in time, seeming like it's just above a coin flip. There still are a few officials that have said a 50 basis point rate cut in December is not fully factored in. And so still quite a bit of questions about what we'll see from the Federal Reserve in December. Let's check in, though, on how markets in Asia are faring. It is Singles Day. Min Min Lo is standing by in our Hong Kong studio with more. Min Min, what are you watching?
Hey, Jen, as you can see behind me, it's looking a little bit mixed here in Asia. Of course, we had the overnight rally of the tech names in the U.S. Nvidia up close to 6% overnight, and that is helping to fuel the momentum for the AI rally here in Asia as well. The likes of SK Hynix, TSMC gaining, helping to lift the Kospi and the TAIEX. TSMC did report its October revenue coming in at close to 17%, beating analyst estimates, but it is the slowest pace of growth in about 18 months, but we're still seeing a bit of reassurance from investors that maybe the the valuation question, perhaps not too worrying at the moment. We're still seeing the TSMC gaining. But we flip the ball. What is not rallying is the Japanese yen. As you said, it's the prospect of the government reopening in the U.S., the treasury yields pointing up, the dollar gaining, and that's putting downward pressure on the yen down about now at about 154 levels. Of course, if it reaches that 155 level, that is possibly when we could see the BOJ making a verbal intervention against excessive FX rate. But this trend is expected to continue. Mark Cardmore from MLive saying we could see this hitting maybe 158 in the next couple of weeks. Of course, the lack of conviction around a BOJ rate cut in December possibly making the yen even more vulnerable as well. But we also have the 30-year bond auction in Japan today. Demand not looking great, below the 12-year average. And here you can see the bond yields, the yield curve steepening a little bit, especially at the longer end here.
Thanks so much, Min Min Lo in Hong Kong for us. We'll check back in with you in just a bit. Now let's turn back to our top story. The record-setting 41-day U.S. government shutdown may end as soon as Wednesday after the Senate passed a temporary funding measure backed by a group of 8 centrist Democrats. For more on the latest, let's bring in Bloomberg's Rosalind Matheson, who is joining us from Singapore. So, Rosalind, give us a sense of what we did see last night in the U.S. and potentially how it gets us closer to a resolution.
Well, certainly it did get through that first hurdle, which was the Senate, and it did so in pretty easy fashion. It now has to move through the House, and that's possibly a bit more of a complicated exercise, although the expectation is you might even get a House vote as soon as Wednesday. And if that gets through, then you could get the shutdown essentially lifting by the end of this week, although it would take quite some time for some of these changes to filter through and obviously for things to get working again, for money to get going where it needs to go, for workers to come back, for workers to get paid. That doesn't happen in an instant, but it does seem as though we're headed potentially in that direction. The big question again is what happens when this bill comes before the House. You do have the hardcore, more conservative Freedom Caucus, the Republicans saying they should support this bill. A lot of Democrats quite unhappy about it, obviously, because there's nothing in this bill that guarantees the extension of those tax credits for Obamacare, and that's really what Democrats have been hanging their hat on, and so big questions around that. But do enough Republicans also feel uneasy about this bill in the minute? It does seem as though Republicans in the House are confident, at least the leader of the House, that he will have the numbers to get this through. So does this shutdown end effectively within a matter of days?
And then, you know, what's the expectation next, Roz, especially if we think about some of the comments we've heard from President Trump? What could we see really expedited, especially as we head into the holidays?
Well, obviously, we want to see how this lifts and what the impact is on things like air travel as well. Going into Thanksgiving, we've seen quite bad snarls for air traffic in particular. Does all that start to ease off? But then how does this play into politics beyond the next couple of weeks, particularly going into the midterm elections next year? How does it play for the Republicans? How does it play for the Democrats? The Democrats try and turn the midterms into really a vote about healthcare, about access to healthcare for many Americans. Do people still remember the shutdown? Do they blame a particular side for it or for the economic impact that we've seen? And of course, not all funding would continue for an entire year. Are we back in the same place essentially at the end of January again with these questions around continued funding for key agencies and arms of the government? So are we just pushing this conversation back again by a few months? So there's lots of uncertainty to come there. And really the key question again, how will Americans factor this into their thinking come midterms, which aren't that really that far away?
Yeah, exactly. Roz Matheson joining us. Thanks so much, Roz, for starting us off this morning. Let's dig into some of the market reaction a bit more with Anita Krishna Gupta, the CIO at Wealthbrix Capital Partners. Anita, thanks so much for joining us in Dubai. We were just speaking to Roz potentially about what we'll see next. When we think about potential reaction in the markets, what are you anticipating right now? There is still a bit of uncertainty, but you must have to prepare for multiple outcomes.
Yeah, so good morning, Jennifer. What we have seen is a few roadblocks along the way. It's been a great year so far for most asset classes, barring the US dollar and oil. So this year has all been about having a balanced portfolio. However, tech has made a roaring comeback. So what do we see going into the year end? If we see the resolution of a few of these roadblocks, whether it is the US government shutdown that looks to be getting dissolved now. Another factor that's come in is consumer confidence, consumer spend in the US. That's definitely been affected by the shutdown. How long will that take to pick back again? Again, you've got trade, tariffs which have affected the consumer in the US. As you're right, holiday season is coming in. So are we going to see that pick up in consumer spend? Very important. However, what we are seeing is this continued capex from AI, which is boosting the economy. At the same point, we've got, on the contrary, labor getting affected. Again, talks about how AI is going to affect employment. So a number of factors, but we are fairly positive going into 2026, just on the back of earnings growth.
And yet, you mentioned you're still negative on the USD. We are seeing some strength, though, for the greenback today, that at the expense of some of the other currencies, including the Japanese yen. Do you still remain negative on the dollar, and why?
We are a little bit negative on the dollar, not more so for the dollar, but more on the fact that we are seeing a shift in terms of what the central banks are keeping as reserves, whether it is a shift to gold. So just keeping that in mind, keeping in the mind, in fact, that we are going to see also the Fed cutting rates. We do expect a rate cut in December. We think that labor data would lead to a rate cut. So we're getting, lower treasury yields that should, imply a weaker dollar fundamentally. Again, not expecting some sell-off, just a slight, weakening in the next few months.
Does Stephen Myron's comments on a 50 basis point cut, he made those comments on Monday, potentially change your expectation then for December? We heard from Jerome Powell said December cut is not a foregone conclusion. And yet it still seems like there's a bit of discrepancies in terms of what exactly we'll see.
Well, the FOMC was divided after the last Fed meet in terms of, from cuts to keeping the rates where they were to a 50 basis point cut. Now, 50 basis point cut would mean that the economic growth, that's what the Fed watches, along with labor data, has to be, pretty dire for them to go for a 50 basis point cut so far. So we still expect a 25 basis point. Even the 25 basis point cut, we've been seeing the probability falling after what Chair Powell spoke last time. He, of course, spoke about, driving through fog, you need to be slow. So he's looking at data points. There's been a lack of data points because of the Fed, looking to see where, for data on labor, and that hasn't come through because of the government shutdown. So once we start getting these data points, which should start by this Thursday, that's when you can take a clearer view. But our call is still for a 25 basis point cut in December.
Do you look elsewhere, Anita, potentially as we sort of ride out what the expectation is in the U.S.? Are you looking to other markets where we're getting a bit of clarity in terms of driving through the fog?
Absolutely. So this year we have been literally screaming from the rooftops. It's all about a balanced portfolio, because with most major asset classes going up, whether it's precious metals, gold and silver, whether it's fixed income, right from EM, local currency debt, to most regional equity markets are up, led by the UAE, led by China, led again we have seen US tech. So this is the one year where you've actually got to be diversified across assets. So besides the US, which we are actually neutral at this point, but we say always stay invested in tech and AI growth stories, we are also being positive. Japan, we went positive. We went over Japan in early October. When we saw the new premiership, which is growth-driven. We also, like India, we think India's at a turning point. It's had a dull year. We think it should start picking up. Hopefully, tariff concerns start diminishing for India. We also like the UAE. We've been, continuously harping about the fact that the UAE is a growth story. So we're looking at economies where we are seeing economic growth upgrades, and that includes the UAE. And this is where we see, diversification. So again, our balanced strategy where we have a mix of fixed asset. We like EM, local currency debt. We like emerging markets. China, yes, we are a little bit overweight, but we see it as a tactical trade, not a long-term strategic trade.
always great to get your insights. Anita Krishna Gupta, Wealthbrix Capital Partners CIO, joining us there in Dubai. Thanks so much, Anita. Great to speak with you. Now, for a look at some of the other stories we're following this morning. As lawmakers push to end the shutdown, air travel disruptions have mounted across the U.S. More than 2,000 flights were canceled in New York by late afternoon, according to aviation analytics firm Syria, with Chicago O'Hare International Airport having the most cancellations. An aircraft traffic controllers union has warned of a, quote, erosion of safety as the critical workers missed their second straight full paycheck. President Trump says the U.S. is close to striking a trade deal with India that would reduce tariffs on Indian goods. Trump earlier this year placed additional tariffs on India's exports to the U.S., in part to pressure New Delhi to stop buying Russian oil. Currently, the rate on many Indian goods is 50%. Now, coming up, Syrian President Ahmed Al-Sharaa met with U.S. President Donald Trump at the White House, marking the first visit by a Syrian leader since 1946. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Ahmed Al-Sharaa has met with U.S. President Donald Trump at the White House. The Syrian leader pledged to join a U.S.-led coalition to defeat the Islamic State. U.S. Secretary of State Marco Rubio has also suspended comprehensive sanctions on Syria for 180 days. Trump described Al-Sharaa as a tough leader, while hinting further announcements could be coming soon.
Yeah, you can expect some announcements on Syria. We want to see Syria become a country that's very successful, and I think this leader can do it. I really do. I think this leader can do it.
Joining us now is Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. Paul, thanks for joining us. So it seems like this is relatively a positive situation for Syria to walk away from the White House on Monday. Walk us through some of the other announcements that we heard on Monday.
So ostensibly, he was there to ensure that Syria joined a global and US-led anti-ISIS coalition. That was sort of the main reason for me for him to be there. But obviously, the sanctions relief and that 180-day waiver was very important for Syria. It's a country that's been under decades of very, very strong sanctions from the US, European countries, and others. And Syria's desperate for them to all be lifted to help rehabilitate a country that's just been devastated by more than 15 years of civil war. So that was very important for Ahmed Al-Sharaa, and symbolically too. Yes, he's met Trump before yesterday. He'd met Trump twice this year. But I mean, this is a guy that had a $10 million US bounty on his head because of just a year ago because of his former links to Al-Qaeda. So it's quite stunning turnaround.
Especially if we consider some of the international trips that he's been on as well, Paul. What's the likelihood, though, we'll see some definitive announcements potentially leading to, supporting Syria's efforts to rebuild in the country?
So far, I think we've sort of seen a drip feed, mostly from states like Qatar. There's been a little bit from Turkey. Turkey is arguably the country that's sort of closest to Al-Sharaa and has the most influence on him. But beyond Qatar, there's also Saudi Arabia. But there's been nothing, no sort of wave of FDI announcements or no sort of wave of funding announcements. And I think a big reason for that is these sanctions. Syria is still under US sanctions, and for all that 180-day waiver, the Caesar Act, which is a deep and wide-ranging set of sanctions on Syria, it still exists. And I guess a lot of would-be investors and others will think, well, until the Caesar Act is repealed entirely and not just given, not just given a waiver, then they're going to be very reluctant to put their money into the country.
Right, but quite a historic scene that we did see on Monday, though. Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. Thanks so much, Paul, for joining us there from Dubai. Now, coming up, Tanzanian authorities have ordered the arrest of 10 senior leaders of the main opposition party. It's part of a crackdown in the wake of deadly protest over the East African nation's disputed election. More on that next. This is Bloomberg. Tanzanian authorities have ordered the arrest of senior leaders of the main opposition party as part of a crackdown after deadly protests over the disputed election. For more, let's bring in Bloomberg's Andiro Oganga, who joins us from Kigali, Rwanda. Andiro, walk us through what more we know about the crackdown on the opposition in Tanzania.
Good morning, Jen. So what we're seeing is the government is trying to silence any form of political dissent by going after these opposition leaders. The opposition leader in the country, Tundu Lissu, currently sits in prison on treason charges, all because he called for reforms, and he's been in prison since April. And now we're seeing the government going after ranking members of the Chadema party on grounds that they were part and parcel of stirring the protests that we saw leading up to the election and the post-election protests that became violent and deadly very quickly. And these are people that have been overly critical and vocal against this administration, forced disappearances, abductions, and also calling for electoral reforms. And this crackdown goes beyond politicians. It stretches across the country. As you can see on your screen, the government has arraigned close to 100 young people in court, according to a list seen by Bloomberg, and they're being charged on 2 accounts: conspiracy to commit treason and also treason in itself. And if they're found guilty, they could be sentenced to death by hanging, because treason is a capital offense in the country of Tanzania. Most notable among them is businesswoman and social media influencer Nifa, who danced to a song that the government deems as a resistance song, and she's also part of those who've been charged by treason. And so what we are seeing is these protesters arriving in court bare feet, showing signs of physical trauma. Many of them had bloody faces, bandaged arms, signs of physical torture that they experienced in police custody.
Right.
And this just begs the question of what next for Tanzania.
Right. And Tanzania has been seen as a country of stability. When did things go south?
Jennifer, stability in Tanzania is smokes and mirrors. It was there and it wasn't. If we go back to President John Pombe Magufuli's reign, he was seen as a disciplinarian, another word for a dictator. He ruled with an iron fist. His word was law. And during his tenure, we saw Tundu Lissu shot 16 times outside of parliament, and he was a sitting member of parliament. And this just goes to show that if the government can go after those in power, what about citizens?
Bloomberg's Andiro Oganga in Kigali, Rwanda. Thanks so much, Andiro. Plenty more coming up, including the Veon Group CEO. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. One step closer, the U.S. Senate has passed a temporary funding bill that could end the 41-day government shutdown. The House plans to vote on the measure on Wednesday before sending it to Donald Trump to sign. We speak to Scott Boatwright, Chipotle Mexican Grill CEO, on the chain's expansion plans for the Middle East. And in today's Big Take, Dubai's unbuilt penthouses spark a bidding spree among the ultra-rich from around the world. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersechi. And if we take a look at what the markets are looking like today, it is a bit of a mixed picture, that coming despite potential positive signs that we are getting from the U.S. about an end to the longest shutdown in U.S. history. If we take a look at U.S. equity futures pointing downwards right now, but still we should mention what we did see on Monday. We did see the NASDAQ closing up more than 2%, but potentially that's continued momentum into the tech stocks, despite some of the pullback that we did see last week. We did also see S&P closing in the green as well. MSCI Emerging Market Index looking like it's starting a bit downwards today, down about just over 0.3% there. Although we did see a stronger day for emerging market equities, on Monday, actually closing the day, notching its biggest advance in 2 weeks, though it's looking like we're seeing a bit of a pullback right now. Potentially that's affecting EM currencies as well. Though right now, the Bloomberg dollar spot looking stronger right now, marginally up just about 0.1% there. That coming after we did see the dollar falling over the past four sessions. Potentially that's some positive sentiment feeding in from a potential resolution to the government shutdown. And let's just close on gold, looking stronger on the day as well, up just over 0.4%, back over $4,100 an ounce there. That also following the biggest rally that we have seen for the yellow metal since May. Potentially that is U.S. government shutdown feeding into that, but also potentially there's some safe haven bidding because we will get a number of economic releases that have been delayed coming out after this shutdown eventually ends. Potentially there could be some downside surprises there. We are seeing other commodities, though, lifting on the day as well. Let's just end, though, on a quick terminal chart for you. On Monday, we did hear some commentary again from Stephen Myron, who once again called for a 50 basis point cut. Potentially some of the consumer sentiment that we are seeing in the U.S. factoring into that. However, if you take a look at this chart here, we're still seeing short-term Treasury yields ignoring this, and potentially they've found a level. And the odds for a rate cut, let alone two, are just above a coin flip, though, as we were just hearing from our guest Anita Krishna Gupta earlier today. She's expecting 25 basis points. Potentially we see that. But Jerome Powell, as we've heard from him quite a bit, a cut in December is not a foregone conclusion. Let's turn back to the markets and actually what we're seeing in Asia. China's Singles Day shopping festival is now in its 17th year. It's evolved over the years from a one-day event to a weeks-long extravaganza. For more on this, Min Min Lo, Bloomberg's China correspondent, joins us from Hong Kong to walk us through it. Min Min, how is this year's sales looking like, and how intense are the promotions? What have we been seeing?
Yeah, definitely very intense. You just look at the length of the promotions. Some of these platforms like Douyin, Kuaishou, some of them started as early as October 7th until November 11th. That's more than a month. So we have maybe less than 12 hours until the end of the shopping festival for some of the platforms. Alibaba, for example, is extending it till the end of the week until November 14th. So we're still waiting for those numbers to come in. We are operating a little bit in a blind spot here for the past few years, because some of the major platforms had stopped publishing their GMV sales data from the Singles Day festival after the numbers started trending not so positively. But we have been relying on private data. But so far, early signs at the start of the campaign, and based on what these companies are seeing, it looks like growth was pretty strong. And competition is intense. You look at Tmall's, Alibaba's Tmall. I was looking at the discounts there. They are as high as 15% with stackable digital vouchers. And Alibaba had allocated 50 billion yuan of consumer vouchers to its VIP customers. That's the highest allocation of consumer vouchers to this festival ever. So competition is intense, of course, with the consumer downgrade and the weak consumer sentiment going on. Everybody loves a deal. There are also some newer sort of channels of sales that could be catalysts this year, because some of these platforms are pushing for these flash deliveries, goods that could arrive at your homes in 30 minutes or so. It's no longer restricted to restaurant deliveries. They're connecting more supermarkets and convenience stores to those platforms as well. So that could be another catalyst for growth.
Yeah, we'll wait to see what the final numbers are, though, once Singles Day wraps up. Min Min Lo in Hong Kong walking us through a bit of Singles Day interest there. Thanks so much, Min Min. Great to have you. Now, telecoms firm Veon Group has reported third quarter revenue of just over $1.1 billion. That's a jump of 7.4% year on year. The Dubai-based company has also raised its outlook for 2025, projecting annual revenue growth of between 7 and 8%. Joining us is Kaan Terzioglu, Veon Group CEO, joining us there in Dubai. Kaan, thanks so much for joining us. So you talk about being a traditional telecom company, but it really seems like the other parts of your business are increasingly leading to growth. Can you talk about how much some of the other parts of the business have factored in to these results?
Good morning, Jennifer. Thanks for having me. September was a remarkable month for us because it is the first month number of our digital service users surpassed our telecom SIM users at 145 million. In the markets that we operate today, which is actually from Pakistan to Bangladesh, Uzbekistan, Kazakhstan, and Ukraine, we serve a population of 500 million. And 1 out of every 3 people is our telecom customers, and now 1 out of every 3 people is also our digital service customers. And that digital services is what's driving our business up and up. It was almost 18% of our top line, and last quarter it grew 63%. And actually, the margins are also improved by 320 basis points because, the extra growth that we see in digital services is coming with margins higher than we were expecting. So I'm very, very happy to see that the concept of a digital operator is becoming very tangible. And I think in frontier markets, and possibly also you will see the same things happening in Africa, it is actually the telecom operator needs to take responsibility to bring meaningful digital services and augmented intelligence to the hands and fingerprints of the consumers.
Is your expectation then we'll continue to see some of these digital services potentially cannibalizing the core business? How do you balance that moving forward?
No, actually, not at all. What we see is our digital services in the areas like financial services, entertainment, healthcare, education, ride-hailing, and enterprise services. The moment a customer of our telecom business starts consuming these services, their engagement increases, their ARPU goes up, and their retention actually improves. So right on the contrary, rather than cannibalizing, it's a great complementary value that we see in the marketplace. The more we are relevant to the customers, the more number of minutes we serve them, the bigger the potential, the bigger the wallet share, and the bigger the growth opportunity.
Do you expect then to expand to more markets at this point? Is that something you're eyeing?
Well, currently we are operating in 5 countries, which we are very proud to serve. I am prioritizing our growth in these countries as my #1 priority, but as we look further, we are very excited to look into large population countries where the demographic dividend is still live. People are getting richer and richer, and basically that we can serve the underserved. And I think that's a very sweet spot that we see in our business model. And if there are opportunities like that, which is at reasonable prices, of course, we would show interest.
Does that potentially mean Africa is on the horizon?
I think Africa is a beautiful market with, definitely growing populations, and most importantly, populations being significantly underserved when it comes to financial services, entertainment, healthcare, education, and all businesses around, from classifieds to ride-hailing, the areas that we have been investing in our own markets.
Kaan, can you talk about some of the dispersions really that we're seeing in the markets that you operate in? If we take a look at some of them, there's quite a bit of volatility, especially if you consider what we've seen in 2025. How do you operate in such different markets, considering some of the FX risks that might come with it?
Look, I think operating in frontier and emerging markets requires a lot of discipline. And that discipline is about really looking to the markets and having a policy of adapting disciplined, fair value pricing. The moment you take your eyes off the ball in terms of the GDP growth and consumer spending, and you do not actually make the actions that is necessary to have your pricing adapt to the new realities of inflation and devaluation, you will lose the game. We apply very disciplined fair value pricing in our markets, as well as we leverage our local operations from local markets. And I think those two things are the best recipes for managing your risks in frontier and emerging markets. And we do have a track record of applying that discipline continuously.
All right. Well, we appreciate you joining us to walk us through those results. Veon Group CEO Kaan Terzioglu joining us there in Dubai. Thanks so much for being with us this morning. Now, coming up, we speak to the CEO of fast food burrito chain Chipotle about its expansion plans as it contends with a consumer slowdown in the U.S. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. 2025 has been rough for Chipotle. The fast casual chain has cut its outlook for the year 3 times. The latest guidance change sent shares plummeting the most in a single day since July of 2012. Rising costs and diners pulling back on eating out is hitting the bottom line. Hoping to capitalize on growth in other markets, though, the burrito chain is expanding further in the Middle East. Joining us is Scott Boatwright, Chipotle Mexican Grill CEO. Scott, not yet ready. Let's potentially take a look at markets and what we are doing right now. Actually, let's go to a break. Coming up, surging demand for luxury off-plan property in Dubai shows no signs of easing. But how long can the boom last? We'll discuss that in just a bit. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Shipments from Chinese steelmakers to Saudi Arabia are up 41% in the first 9 months from a year earlier, marking the biggest jump to any major market. The hike signals China is still flooding the world with record exports as a rising tide of protectionism is offset by resilient demand in Southeast Asia and growth in the Middle East markets. Overall exports in the first 10 months of the year are at a more than 97 million tons, surpassing the same period in 2024. Egyptian inflation has quickened for the first time since May on the back of a surprise jump in rents. Consumer costs in urban areas grew an annual 12.5% in October, with the jump increasing the chances of interest rates being left unchanged next week. Before the reading, annual inflation had slowed for 4 straight months, helped by the recent strength of the Egyptian pound. And Bloomberg has learned Qatar's sovereign wealth fund is teaming up with Oryx to start a $2.5 billion private equity fund. The investment would be QIA's first in a Japan-focused private equity fund. Oryx will reportedly provide 60% of the capital, while QIA would be contributing to the rest. Now, let's bring you this story again. 2025 has been rough for Chipotle. The fast casual chain has cut its outlook for the year 3 times. The latest guidance change sent shares plummeting the most in a single day since July of 2012. Rising costs and diners pulling back on eating out is hitting the bottom line. Though hoping to capitalize on growth in other markets, the burrito chain is expanding further in the Middle East. Joining us now is Scott Boatwright, Chipotle Mexican Grill CEO in our Dubai studio. Scott, thanks so much for joining us. Talk to us about this expansion, why you're bringing the specific model of drive-through to the Middle East, and why now?
Hi, Jennifer. Good morning, and thanks for having us on. It's always been our endeavor since we started the brand back in 1993 to bring our way of food, our way of eating food with integrity to as many people around the world as possible. And so when we found our partner in Al-Sharaa Group in the Middle East, we knew it was be a natural extension of our brand and a great partner who could bring Chipotle to the region with a lot of success.
So then, Scott, talk about what you've seen already in some of the markets outside of the U.S. and whether or not you're taking some of the learnings in your home market to your expansion in the Middle East.
Yeah, it's a great question, Jennifer. So we've had a lot of success in the U.S. and also in Canada. We've expanded into Western Europe over the last many years. We are currently in France, the U.K., and Germany. And we knew that Middle East would be a natural extension for us to bring wholesome, nutritious food to the region in a place where we knew there'd be a lot of fanfare. And I'll tell you, Al-Sharaa Group has been extraordinary partners in our expansion here, and we've been met with exceptional fandom and a great reception here in the Middle East with volumes that rival some of our best performing restaurants in the U.S.
Scott, when we talk about reception, it's been a bit of a bumpy ride for Chipotle, especially with some of the target consumers over the past few months. Can you definitively state what is going on with the U.S. consumer and even with the Chipotle consumer at this point in time?
You know, I've said in the most recent earnings call how we feel like the lower income consumer is under pressure. But I'll tell you, our brand is built well to withstand any economic uncertainty or fears around the economy in general. And so we'll continue to lean into high quality innovation, deliver food experiences that are on trend with Chipotle that our consumers have come to love through the last many years. And so we know with our plan to win going forward is around delivering exceptional in-restaurant and digital experiences. And Chipotle has been through tough economic times in the past. We've weathered those storms successfully, and we'll weather this one as well.
Does this one feel different, though, Scott? I know you've been CEO for just over a year, but I wonder if you think this one feels different. We heard from Paul Krugman, who said actually that he's sounding the alarm about the U.S. consumer. Surely this might feel like a different moment for the brand.
You know, the pace of disruption in business today is probably faster than it has been in the last 10 years or so. And each economic stumble or downfall or hurdle, I should say, feels different. This one feels specifically challenging because the economy in general seems to be holding up just fine, but there's still uncertainty for that lower income consumer about what's to come. And I think their angst has them sidelined at present, or spending on things like healthcare, insurance, financial services, or general merchandise, and pulling back on things that may be discretionary.
How much does the expansion potentially offset some of these concerns in the U.S., Scott?
You know, the U.S. is obviously our bread and butter. We're closing in on 4,000 restaurants in the United States today. The reception we're receiving outside of the U.S. is exciting to see. And some of the same fan experiences we saw when we first opened in the U.S., we're starting to see in the Middle East. I think we've already said publicly we're expanding to Latin America next year, as well as Southeast Asia. We'll open in South Korea as well as Singapore. You know, as you think about partners around the world, we're looking to, again, expand our way of food, this idea of food with integrity around the globe, and what we believe to be the best-in-class eating experiences.
Do you have to potentially think about the impact, though, of tariffs on the brand? Do you look at increasing prices at a certain point in time? I know you're exploring some other options, but how do you think about that?
You know, we're seeing some inflation in the business today. I think I said on the last earnings call that we'll see some modest inflation as it relates to tariff impact, as well as commodities overall. I know steak in North America today is probably at an all-time high. We don't see that pulling back at any point. We don't think it's right in this environment to pass along those cost pressures to the consumer. So we'll absorb most of those with our partner suppliers and look for other mitigation opportunities to continue to hold margin constant without having to take price.
Well, Scott, we appreciate you being there in our studio on this day of expansion for you and the brand. Scott Boatwright, CEO of Chipotle Mexican Grill, walking us through some of the expansion plans for the brand. Thanks so much, Scott. Let's just take a quick look at where markets are trading right now. We mentioned potentially we are a step closer to the shutdown ending at a certain point in time, though there are still a few other steps. Potentially that sentiment, though, is feeding into markets right now. It's looking like U.S. equity futures potentially looking to start the day on the downside. In Europe, though, potentially we see some positivity feeding into Euro Stock 50 futures. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasanja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.